By the end of this video, you should have a good understanding on what is money. I know it sounds stupid, but a lot of people really don't have a good understanding on what is money. You'll have an understanding of what is a central bank, what are the pros and cons of central banking. Let's start. And let's start with money. Money has to be acceptable and it has to be trusted. It has to be divisible. Cows cannot be money. It has to be durable. Bananas cannot be money. It has to be a store of value like gold and a medium of exchange where you can get something for something and it has value. It also has to be fungible, which means a $5 bill is a $5 bill. And a $5 bill can be exchanged for 5 singles. It has to be portable. It cannot be rocks. And most importantly, it has to be fiat or used to pay all government debts. What was used before money? Well, there was barter back in the days before money. There was other commodities used for money, such as cowrie shells, rocks, tobacco, tons of things were used as money. The first central bank was actually, if you think about it, was started many years ago, and that was when goldsmiths and temples used to store money. What happened was, back in, let's say, the antiquity days, when people had gold or people had items that were of value, instead of keeping them in their house, they would bring that to a central location where it could be safely guarded, which goal was to protect the assets. These were goldsmiths and temples, as I said before. After a while, the goldsmiths and the people that ran the temple realized that people weren't coming back for their gold. They realized that these receipts were circulating in the economy, and that was the first early money. So they decided to take advantage of it, and they produced more receipts than the actual gold that was at present. And that was the beginning of paper inflation. So central banks are not commercial banks. They don't deal with the public. They don't interface with the public. They're usually autonomous from the federal government. In some cases, they're interwoven. They're a lender of last resort. In the case of the United States Federal Reserve Bank, which is our central bank, they have additional mandates such as full employment, stable money environment, and managing inflation. Some of the issues with central banks is the trust in the currency. Again, it's the lender of last resort. It's the regulator of currencies. It can buy and sell all types of assets. It supervises and stops bank runs. And in some cases, I said, it's independent of the federal government. In the United States it is. And it regulates the money supply in circulation. If you like the video, give me a thumbs up. This is a good point to do that. Alternatives to central banks. Well, there's BRICS, which is an organization it's BRICS Plus, which involves Brazil, Russia, India, China, and South Africa. And they are doing some transactions off by themselves, which is interesting. 90% of the trade of the United States is done in U.S. currency, so that's important. Bitcoin and other distributive layer systems are also possible alternatives to central banks. The United States was on the gold standard from about the end of the Civil War into actually the Bretton Woods Agreement in 1944. But in 1971, President Nixon had something called the Nixon shock, where he detached gold from the dollar, which meant that the dollar floated. It changed the whole way the world works in its economy. If you liked the video, give me a thumbs up and subscribe, and have a great day.